Hey, Trader Stephen Kowitzel here with thetradersplane.com. Back from vacation in Key West, drove the Florida Keys, had a wonderful time with my wife, left the kids, so that was, I left the kids with the grandparents, so that was wonderful. It's good to be back though, nice, sunny. The market is doing pretty well, so that was nice to not have to worry about that when I was gone. I just had my triggers in place, and before we get into, I have a lot I want to cover today. We're going to cover the market, we're going to cover breadth, we're going to cover a lot of individual sector ETFs because I'm seeing some movement, and we're looking at some individual stocks. So I just really want to dump on you, brain dump on you, everything I'm thinking about right now. So real quick, let's just read this disclosure real quick so we can move on. Cool. Lawyer's happy. Okay. So let's start with the NASDAQ right here. I haven't really done a whole lot from this chart since a couple weeks ago, but you have right here a bull flag. I know there's a lot going on. I should really clean this up, but so you had a clear as day bull flag. What looked like could have been a head and shoulders, right? Well, that didn't happen. So you know, I've been talking about for a couple months, when you come out of these sloppy areas of market corrections, just choppiness, trends can be very strong. And why they can be very strong, you just have to look at it this way. The market's going to wear you out until you're a bear and you don't want anything to do with it, and then it's going to take off. So it's just a lesson I've learned over the years that I always try to stay a bull as long as I can, or at least when the market is bearish, I try to have the attitude as a new uptrend is 1 to 2 days away. And since I have changed that persona, that mindset, I believe I've done much better with that. There's going to be a lot. Who was it? Peter Lynch just reread one of his books. Said there is a lot more money lost anticipating bear markets than actually from the bear market itself. So the NASDAQ right here, you can see it had this little mini double bottom, broke out right here. So this was the day that you should have been buying. This is the day that I was buying. I was buying a little bit right here, and pretty much by this day I was fully invested. And the reason why I started to build positions in this one is because the NASDAQ did not come down and break the 200-day moving average. And one of the biggest key things that I was noticing is growth stocks, which are typically the first to go on the downside, they were acting pretty well. And when the growth stocks are acting pretty well, how hard can it be? Because typically when a bear market starts, the growth stocks are getting slammed. And that was just not the case. So started building my positions, and it has done very well lately. So the market flagged out right here. This is the NASDAQ, and continues its upward trajectory. You know, it looks like it's reversing right at this all-time high. That's okay. That's not a big deal. It doesn't mean it's going to crack wide open. So it's in rally mode, okay? And I identify a rally, and I've studied these corrections in the past. They come out of these corrections in a rally mode, and as long as it is riding, the NASDAQ is riding the 20-day moving average, in my opinion, you need to be in, and you need to be in as much as you're comfortable with. And I've been fully invested this whole time. Just because you don't know when you're going to get just a huge run. Some of them are very short. But you can see right here that the pink line is the 5-day moving average. The green line is the 20-day moving average. So I use the 20-day moving averages for my rally test. So you can see right here, it tested right here and then took off. I will tell you a funny, quick story. I think this was last Tuesday, this shakeout right here, and this was Tuesday, and it was a couple minutes before the market closed. I thought that I have this trading system in the members area, and sometimes I trade the leveraged ETFs. I knew that the 20-day moving average had broke on the S&P 500. I was literally trying to get out the door to go to Key West, and I sold my leveraged ETF position because I thought the 20-day moving average was breaking and the rally was over. Well, I didn't check the NASDAQ. So I didn't even look at the market until Friday. This was Friday when just everything was going up, and I was on vacation looking at myself going, holy crap, I really screwed up. For some odd reason, instead of hitting the sell button, I hit the buy button and doubled my position. Never done that before in my life. So let's just say Friday was a good day because I thought that this rally was taking off without me, and I had a double position. Again, I don't know how that happened. I've never done that before. I was in a rush to get out the door, so it worked out well. So that's my funny story. Probably never happen again. I'm sure next time the gods won't be so nice to me. So it's still at that 5-day moving average. I wouldn't be surprised if this pulls back and just test the 20-day moving average again, because a lot of times on these rallies, it'll test it a couple times. So, you know, if it pulls back in, don't freak out. You can sell some into this strength. Sell as much as you want, but you want to still have something, even if you have to give some of it back and if the market cracks wide open. You know, I'm a trend follower, so I try to stay in as long as I can. Some trends are incredibly short, and you'd have been better off just selling, taking profits quick and selling in strength. But it's not the short trends. It's not good. They're not going to make you a whole lot of money. You're going to get these nice trends 2 to 3 times a year. These nice stocks, you know, 2 to 3 times a year. That is what is going to catapult you ahead of the overall market. And if you're so used to taking profits so early, yeah, you're going to be okay. But if you're looking for that long-term capital appreciation, you have to be willing to sit through some pullbacks, and you have to be willing to give up some short-term pain for some long-term gain. But the 20-day moving average is my line in the sand. So it's funny because the S&P 500 doesn't look nearly as strong as the NASDAQ, which I'm okay with. You want the tech stocks, the more aggressive stocks, to be stronger. Broke out of a descending triangle, which was a bearish pattern. Everything acted right. See, this was the day that I thought I sold my leveraged ETF and I doubled my position. So, haha, that helped. That made me $1,000. But anyways, again, you have a double bottom right here, held very closely, maybe broke one day that 200-day moving average, and came down and tested the 50-day moving average, tested the trend line, and now it's taking off. So you have this a lot happen when you're rallying out of market corrections. You'll get these quick shakeouts, and they'll shake me out too. So don't get me wrong, I'll get I did. I just made an error in my order. So you'll get these shakeouts, and then it'll just absolutely take off. So, you know, one thing I teach in my 5 Cornerstones course is anticipate the shakeout, because I like to buy stocks that have had 2 or 3 failed breakouts, because just everyone is wore out, and that's the time, that third time's the charm. So just, it's okay. Be willing to buy something back if you get shaken out once or twice. Don't hate the stock. But this looks in a similar flag pattern, and then it broke out relative to the just like the NASDAQ. I would expect for this to pull back a few points, but just keep in mind, like, look, I don't know if this kind of rally is going to happen, but look how short this rally is compared to how short this rally can be. You know, my point is they can last. This is a 3-week rally coming off this. They can last 2 to 3 months. Forget the whole sell in May and go away thing. Follow the price action. It might, you know, it might take us well into July and August, and then you have your bad months. Follow the price action first. Don't really worry about the seasonality. If it breaks and then the seasonality holds true, well, so be it. But my point is, stay in it. Look at this. If you took, I guarantee you, some of you were taking profits right in here and just watch the market go. The big problem with that is when you're buying and selling in here, you would have made a lot more money if you just would have bought and held until the rally was over. So you'd have been shaken out right here. You could easily got back in on this breakout and just continue to hold and get out right here. So, you know, you got this breakout right here. You're out here. Get back in a few points higher. You're out here. I mean, these are good moves. So You made a lot more money if you just would have held 3 or 4 stocks through this whole thing. I know that's easier said than done, but hey. Let's look at the small caps real quick. This sucker is long gone. Like, this is the weekly chart. It is, the dollar is strong, so small caps are going to outperform the S&P 500, this relative chart. You can see this is kind of reversing and probably going to ease in, but look, man, it's beyond a 52-week high. So how bearish can you get when tech stocks are leading and all this price action is going on? Yes, pullbacks are going to happen. So just have your rules. Just be disciplined and have your rules. My rule is a rally coming out of correction, I'm going to follow that 20-day moving average. When that breaks, I'm going to start to ease up and ease up and ease up. But if I have some individual stocks that I really like, they're holding up, I'm staying with them. So I might go from 100% invested to 40% invested during a pullback if some of the stocks I like are still holding up. If everything starts to break, I'll move to cash very, very quickly. Got no problem with that. So small caps are very bullish. Let's look at the dollar. Get a sip of coffee here. All right, USD weekly. Big downtrend, broke out clear as day. A lot of people are thinking, and I don't know, I'm kind of thinking this way too, that this is a pretty good surge, okay? So you got a pretty good surge. It's not going to go straight up. As you can see, it didn't go straight down. It's not going to go straight up. You know, be looking for kind of a little cup shape. Little pullback, retracement maybe to the 38, or here, let's just annotate that and throw a retracement on there real quick. Where is that? Let's just kind of see. So a retracement would be in the zone of 92. We'll just say between 91.75 and 92.25. So let's just call it 92. Be looking for a retracement to in that zone. And then a potential pullback. That's what I'm looking for right now. It could absolutely roll over, but to me, this is a pretty strong surge just for it to just completely roll back over. So I'm thinking better times ahead for the dollar, but you know, the price action will change my mind very, very quickly. So with the dollar being strong, that's going to push the S&P 500 outperforming the international stocks, as you know. If you've been following me before, so you got a relative chart versus emerging markets. S&P 500 broke out relative to emerging markets. You need to own more S&P 500. S&P 500 broke out relative to international stocks. You need to own the strongest one. I don't want to own the weakest one. I want to own the strongest one. And then you have the small cap relative to the S&P 500. Small caps broke out relative to the S&P 500. So the way I look at it, this chart, you have 4 options. You have the S&P 500, emerging markets, international stocks, or small caps. Well, if the S&P 500 is beating the international stocks and the emerging markets, and then small caps are beating the S&P 500, own some small caps, right? I mean, that's just clear as day, because these trends, they can follow for a while. They can be very short-lived, but every time I buy something, you know, from a trend following standpoint, I always have to have the mentality of this can go on for a while. I have no problem when I'm proven wrong. Most of the time, they don't go for a while. You know, I'll take half profits, raise my stop to break even, let the rest run. But because I never know which one is going to run, I never know which stock is going to be my big winner of the year. Oops, excuse me. I have to give them all the opportunities to do so. So right now, that's looking pretty good. Let's go to TLT, our bond friend. I haven't looked at this in a while, but it's interesting. So you have TLT bonds. Not good. You know, it's just it's interesting, and it just reminds me, and it takes me back to my financial advisory days, where I was like, you gotta own bonds, you gotta own stocks, all this stuff. And I'm not telling you not to do it, but you know, bonds can go down too. This simple ETF went from 136 to 112. That is the conservative part of your portfolio decreasing, I don't know, 20, I don't want to say 20%, but that's a pretty good drop. So then you have a bear market rally and a box, and then it rolls back over. Now, I just reread Nicholas Darvish, how I made $2 million in the stock market on my vacation. I highly recommend rereading that. I'm sure most of you already have, but you know, he talks about these boxes. The market steps its way higher, and then stocks, the market, whatever. So they trade in these boxes, and it's just a consolidation. You know, and as it gets to the top of the box, he'll place a buy order for it. And obviously, he'll not do anything while it's in the box unless he already owns it, and he finds the bottom part of the box, and if his stock goes up, he'll hold it as long as it's in the box. But when he identifies a low in the box and it breaks, then he'll get out. So obviously, Nicholas Darvish would have sold this, and then you have, so from this move to this move, now we're looking for another counter trend rally, and it did right back up to the 61 fib level. So there's nothing really going on here. There's nothing to look at. This is still all in a downtrend. It's just really tough because yields are slowly pushing their way up, and bonds are slowly pushing their way down. Eventually, bonds will bottom, but I mean, who knows for now? We'll see if this can surge back above 122, you know, then a new uptrend could resume. But right now, you have to assume that the bonds are still going down until a new higher high is made. Let's go look at some sector summaries. Sector summary. Where are you? Sector perk chart. I want to add the S&P 500. SPX. There you are. Okay. So let's look at 20 days. Okay. So you have the S&P 500 in the last 20 trading days is up about 3%. That's a very good month. Okay. Cyclicals are up there, technology is up there, and healthcare is up there. So you got your three leaders up there, with materials doing just fine. Energy is pulled back, which I mean, if I were to go back a little longer, energy is doing just fine, but utilities have been taking it on the chin. Mostly, it's still in a bear market, and that's because that the yields are rising, so that's going to push down utilities for a couple reasons. One, utilities typically have high debt. They're high debt companies, so that's going to rise their borrowing costs. And two, they're also dividend paying companies, so they're going to, if bond yields are rising, utilities are going to look less attractive, so they have an inverse relationship. Now, let's go in the last 5 days. Utilities are not very good. Materials are starting to lead. We're going to look at some ETFs here in a few, some industry ETFs. But materials, technology, I'm noticing some healthcare, and financials are all of a sudden starting to perk up, which is nice because I own a couple bank stocks, or we own a couple bank stocks at the Traders Plan newsletter. So these are starting to perk up nicely. But again, don't invest in the laggards. I mean, just don't do it. Like, I mean, why? It's just strength follows strength, weakness follows weakness. Just remember that. And sometimes I forget that. So I am not perfect, but it's just a big aha moment I had when I was a financial advisor. Strongest stocks typically get stronger before their move is over. The weakest stocks typically get weaker before their move is over. So just try to buy, towards, first stage type moves, and ride it using moving averages. And I think moving averages are just the simplest way to go. Moving averages and trend line. Why add a bunch of oscillators and just follow the price? There is one thing every single one of these ETFs or stocks have in common, and that is price. You can do all the fundamental analysis you want, but follow the price and the volume. They all have price, and you can easily stack each other up by that. Industry summary. Okay, so let's go look at the industry summary. So I just kind of wanted to show you something. 1 week, yeah, that's cool. So what I'm looking for, so you have the cyclicals is the sector, and the industries, all these industries make up the sector. So you're going to be in the strongest stock, in the strongest industry, in the strongest sector. So what I'm doing right now is just in the last week, I'm seeing where the money is flowing, and I'm looking for the biggest percentage gain up in all these industries. So recreational products, retailers, those are strong. Those are in the 7% range. And I'm just going through here. Solar stocks have gotten absolutely crushed. Don't know why. Didn't look into it, but they are. Real estate holdings and developments. So you got real estate and financials. I just want to take a look at this real quick. China, homes. I don't really know any of these companies. $1.91. Just realty companies. So if we go back to the 1 week, recreational and apparel, there's money moving in cyclicals, and this is nice because this is bullish. Camping World is, and Fitbit. I own Camping World, thank goodness, because that thing has really hit the crapper lately. Polaris, Fitbit. I want to look at, wow, look at that moving Fitbit. I wonder, it's going to make me add that to, okay. Yeah. And this is how you go fishing, right? You have this, let's just annotate this for a second. Fitbit, I traded, where was it? I think we traded it way up here. No, 2017, no, right here. We made some money. But look, you got this big box, okay? So you got this big first stage rectangular pattern. I'm going to put this on my watch list. But you get this big first stage rectangular pattern, and lots of money is flowing in. I'm going to research this later to find why. As a matter of fact, while I'm sitting here thinking about it, let me go grab Fitbit. Just so I don't forget you. Watch list. Okay. I'll look at that later. But you have something that's been down for so long, and then it's got a nice bottoming rectangular consolidation. It's in a box. It's been in a box from 7 to 5, 7 to 5. Well, it's climbing this right side, and it's climbing it very nicely. And you're about to get a 10 to 40 week crossover, so that's not bad to look at. Let's go. So there's a stock that you might want to consider. Let's go look at some sector spiders. Let me look at the 10-page per book. Okay. All right. So you have discretionary, consumer discretionary right here. 52-week high. Made a nice move. I wouldn't chase that. That looks like it's ready to retrace a little bit, so just slow your roll. Technology is reversing today. Again, it's already at a 52-week high. A pullback is reasonable into the 70 zone. This is the XLK. Industrials are lagging, but they're starting to come on. You can see it broke out of this downtrend right here. Nice first stage cup right here. But again, it's kind of a laggard, so I'd rather invest with the leaders. Materials have surged the last 4 days. That is a tall surge, and that is the kind that I've seen that can continue. We're going to look at some here in a minute. Energy is kind of choppy for me right now. You know, it can make, this is XLE, it made this really, really nice move go down. Really, really nice move. But it gapped right here. Everything I've learned is if you're coming straight out of a gap, it's going to have some time to consolidate. I'm not saying it couldn't power through, but you know, I'm looking at playing the odds game, and the odds to me are saying that it needs more time to consolidate after this just waterfall. I don't like it. Consumer staples. I don't like it. How do you like that analysis? It is in a deep downtrend. It's got this rising wedge that'll probably break. It's just, there's nothing pretty about this. It is firming up today, and maybe that's just because the more aggressive things are coming under some pressure. Healthcare is starting to move a little bit, broke out of its flag. You can see I could draw a nice little flag right here, break out, but it's still not even close. So I would break this sector down into the individual industries. Utilities looks like a good short. I mean, it does. So you have it's in a bear market. The 50 is under the 200-day. You have this rising wedge. It broke that wedge, came back. If I could draw, can I draw? I can't annotate on this, but if I could draw a trend line right here, it broke right here, and it came back and it tested the trend line and rejected again. Utilities looks like a short to me. And financials are slow, taking their sweet time. They've been lagging, and it's really been a disappointment, honestly. But again, these sectors, they rotate. You know, there's money rotating into them. So financials have been lagging. It is right at the downtrend, if you want to call it the downtrend. It's right there. So we're just going to have to wait and see, and maybe, and sometimes it'll catch up. Technology could pull back, and this could shoot up. So it's like I said, it's not a stairway to heaven or anything like that. But make sure that you always have a plan when you buy anything. When you buy something, you better have an exit on the downside. I'm okay with you not, letting something run for a little bit on the upside, but if something turns against you, like if this breaks down here, you got no business owning it. You just don't. If it breaks this trend line, like, why would you do that? Because you don't know how far down it's going to go. Now, I have to talk about some marijuana stocks for a little bit, some cannabis stocks, for a couple reasons. One, they're starting to wake up, right? They've been in a downtrend for a while, and they're starting to wake back up. And I like to focus on fast movers. I'm not interested in buying something that could be up 5% in 2 months. I want something that can be up 5% in a day. And they're starting to wake up. So let's look at some, I have a chart list right here. I just want to start with this one. So we're just going to go through some of these. I do own some of these. Let's just go through some of these. I'm not recommending going out and buying this one, this GTBP, but I just want to tell you that I was just certain this thing was going to start taking off. And it did, but it was up 23% yesterday. And I realized that I was going to have to risk 23% to the downside, basically put a stop right under that candle, and I just couldn't do it. But this thing is starting to surge, but I mean, I don't know how high it can go, but it can probably go pretty high. But let's just kind of go through some of these. I'm not going to pay attention to too much of the lower priced ones, just because you're taking on a lot more risk. And right now, honestly, I'm focusing on some of the more institutional quality names. And I say institutional quality, I mean just stocks with big volume that are very close to being profitable. But there's something amazing happening right now in this industry, and it's really nuts to me. They're all buying each other up. Now, don't go buying a bunch of penny stocks thinking it's going to get bought out. But the industry is consolidating, and the bigger players are buying the smaller players in anticipation of capacity when it goes across North America. So right now, that's why these 99% of these marijuana companies, they're not profitable and probably aren't going to be profitable for a couple of years, just because they are building out capacity. And I keep using the Amazon reference. Amazon kept reinvesting in capacity, and then all of a sudden it quadrupled. So let's look at some of these stocks. Kush Bottles. This is, I believe, a profitable company. I don't really like the chart right here. I did buy some right here and sell some right here and right here. So I made a little bit of money on it, but it's starting to get a little sloppy. Big volume day yesterday. You could say this is a consolidation, but I mean, these can make really, really big moves, but it's just kind of sloppy, and I like a little bit neater. So let's continue to, in my opinion, find better options. Aurora Cannabis, I'll disclose I own some of this. Everything looks right to me. Everything looks right. You got Aurora Cannabis. It, found support at this long-term moving average. The newsletter bought some right here. We took some profits. I held on to a few shares. I thought it was going to roll back over, but then it came back, and it had this big volume spike day, and that was, what's today, Thursday, so that was Tuesday. Broke through the downtrend, broke through the 50-day moving average, a nice volume day, and then lots of follow-through yesterday. Yes, it is reversing today. If you're not willing, you're not going to be able to make big profits in some of these stocks if you're not willing to sit through some of these moves. And they're not easy holds. So sometimes just the best thing to do is just to put a stop where you don't want it to go under and not pay attention to it that much, because this is going to chop around. It could roll back over, but it peaked back at the beginning of this year. It broke out of a 6-month downtrend. It found support at the 200-day moving average. It broke out. I mean, it just looks right. It looks right for a move, but not all stocks work. So I'm gonna hang on to it for a while, see what it does. Kronos Group. This is something interesting too, because it's also a biotech, and biotechs I think could help push this along in the marijuana industry. But look, it did the exact same thing. It broke, that Aurora did. It broke out. We made some money on this, and it's looking right. It's looking for a nice move to the upside. But again, you're not going to get the big moves if you try to sell it too early. Yes, there is a risk of it coming back and just rolling 100% back over and stopping you out. But, what I've learned is, without the big winners, and I'm not telling you to go out and buy these, to each his own. This is not a recommendation. Remember the disclosure. All I'm trying to tell you is, if you want the big moves, you got to sit through some good pullbacks. But considering this was up 13% yesterday, and so far it's only given back 3%, I'm cool with that. Cannabis Grow, CGC. This is now on the NYSE, the New York Stock Exchange. I'm watching it, but that's kind of a sloppy chart. Like, that's just, it could pull back into this area. That's just not me. It just feels like it's going to shake out. Because you have this gets slammed down right here, comes back up into the same area, and is trying to get slammed down again. Now, you have the Canada vote right now, and all that stuff's going on, but I'm not overly focused on that and trying to anticipate anything. Because a month ago, everyone was buying marijuana stocks and they weren't moving. So I try to wait for price action, not for news. And then you have Afria, if that's how you say that. Okay, so this one is looking a little interesting to me, because you have a cup with handle, and I put the pattern down here because there's a cluster of moving averages. So you can see that it broke out of the downtrend, right? Came down, tested, came down and tested the 50-day moving average under the 200-day. I don't like today's volume action because you don't want to see a lot of volume, negative volume in the handle. You want it to be an easy drift down. And it's just not happening. You're seeing a big volume day. So, but again, look at these volume days and it's still pushed higher. So there's just more tugging and pulling with these stocks, and you have to be willing to accept that. But right now, I have a big focus on some of these, just because I think that they can move. I trade a lot of Chinese stocks, but honestly, there's so much whipsaw in those stocks. Believe it or not, that I really think that there's easier moves in marijuana stocks than in Chinese growth stocks. So, but this is an interesting setup right here that I'm looking at as well. I want to finish off with looking at some of these industry ETFs, just so we can see really what's moving today. You know, I go back to the oil XOP, and again, I think it needs time to consolidate above this 40 area. I do think the 40 area will hold. I do think commodities could continue to have its day in the sun, but again, if 40 breaks, I would get out of the way if you still have some of this. Utilities is up today, but that looks pretty ugly. Remember, I was talking about it breaking down the rising wedge, coming back, getting slammed down. So, you know, maybe there's horizontal support, but I just think there's better things out there. MLPs are interesting to me. They're interesting to me. Now, I'm not a dividend seeker, but if you're a dividend seeker, they're interesting to me because if we do have a nice run in commodities and it doesn't go straight up, and you can see that these can get slammed just as easy as the next thing. But, I mean, you're getting an 8% dividend while this thing is moving whichever way it wants to go. So, I mean, I don't know how you can argue with that. Retail is perking up this week, and it is looking nice. Kind of hard to argue with what it's doing right here. It's right at the top of this cup, so everything looks good to me. Yes, internet ETF that just doesn't stop, so that's at a 52-week high. Again, I think you want to own some tech. You have to own some tech. I own some tech. I own some cannabis stocks. I own some financial stocks. You gotta have, even if it's like a ETF or a leverage ETF. I think it's hard to be in a raging tech bull market without owning some technology stocks. Regional banks. The regional banks aren't acting as bad as the financials as a whole. I mean, this is right at a 52-week high, so. That's why it's always interesting to look at the sector as a whole and then look at the individual industries, because this is an industry within the financial sector and it's acting just fine. So a couple things I wanted to show you. Gold miners. This could go either way, but it, you know, dollar's probably going to pull back, and it could be good for gold, but man, I'd almost be looking for a gold short somewhere, and it's so hard because this is just trading in the monster box, just the longest, most boring box you've ever seen before. But you know, that's a very good trend line. If that trend line breaks, you might as well try to find a short some way, or just not own it, period. But I'll be probably looking at that as a position if trend lines start to break or it starts to gap down, and but it's so volatile, it'll go one way or the other very, very quickly. Copper's perked up, so along with a lot of materials, you're looking at it's a hard grind. Yeah, right. It's not straight up, but it's made a very, very nice move. Copper has. And if we do, let's go to the monthly chart. I mean, just keep in mind that when commodities peaked back in 2000, 2011, they have just been hit so hard. They're not even halfway where they were. Now, I'm not saying they should have been up here in the first place. But all I'm saying is, if major commodity bull markets, and we really haven't been in a major one since the 70s, which before I was born, but they could be the kind of parabolic moves that, you know, like the tech stocks back in the 2000 bubble. So just keep that in mind. XBI, I think I'm going to close it with this one. This one's looking pretty good. I like this. I don't think these are for swing trade opportunities. You know, maybe if you throw a leverage ETF on there, but I'm thinking that you go and you find some biotechs. Some strong biotechs with strong fundamentals, and you play those as well. But this looks pretty good. It's testing this high right here, so I'd expect another pullback right there might be a good spot. But I hope this was helpful. Sorry, I was on vacation, so I did not get a webinar, but I hope this gave you plenty of ammunition to think about and plan your trade your plan. We've done very well. We've the Trader's Plan, I think 13 out of the last 14 trades, and we've already locked in profits on our next 2. So it's going to be a couple more. So we've done very well. So if you haven't done very well or you've been struggling, we trade a lot of growth stocks and weekly reversal patterns for retirement income. Give us a trial and check us out. I'd be happy to answer any questions that you have. Have a wonderful weekend, and we'll see you next week.